pass the entry drawings account data to purchase account. This entry should be passed with the cost price of the goods used by the owner for personal purpose. Okay. Then when goods are given away as charity, goods are donated or given away as charity, what is the entry you pass? Charity account data to purchases. Okay. Again, this entry is passed with the cost price of the goods. Next, when goods are given away as free samples, what is it? When goods are given away as free samples to customers, what is entry pass? We reduce purchases and the value of the goods distributed is shown as an expense called as advertisement. Goods are going out for an expense called as advertisement. So what entry we pass? Advertisement account data to purchases account. Then we also discuss one more transaction. When goods are used for construction of an asset. We are constructing an asset, and what we are doing? We are spending goods, we are spending our goods, we have purchased some goods for selling it. Instead of selling the goods, what are we doing? We are using those goods for construction of an asset. Goods are going out, and in return we are getting an asset called we are getting an asset. So what is the entry we pass? Asset account data to purchases. Again, this entry should be passed with what price? This entry should be passed with the cost price of the goods. Is it clear?
Yes, sir.
We'll just revise the entries once again, then we'll do a problem on final accounts. When goods are stolen, what is the entry you pass? Goods are stolen, what is the entry you pass? Goods lost by theft account data to purchase account. Again, you have to pass this entry with cost price of the goods stolen. Okay. Just revise the entries once again, then we'll do a problem. Please tell me what is the entry you pass when goods are taken away by the owner for personal use? When goods are donated? Donations or charity account data to purchases. When goods are given away as free sample? Purchases again at cost price. When goods are used for construction of an asset, what is the entry you pass? Account data to purchase account. When goods are stolen, this is the entry we have to pass. Okay. So now write down extract of a trial balance. Extract of a trial balance. I'll give you a question, then we'll solve it. Extract of a trial balance. Particulars: debit, credit. Write down opening stock, debit balance 1 lakh rupees. Opening stock, debit balance 1 lakh rupees. Purchases, debit balance 10 lakh rupees. Purchase returns, credit balance 20,000 rupees. Sales, credit balance 20 lakh rupees. Sales returns, debit balance 50,000 rupees. Sales returns, debit balance 50,000 rupees. Wages, debit balance 25,000 rupees. Close the trial balance. Close the trial balance. Below that you write adjustment number 1. Adjustment number 1. Unsold goods. Unsold goods at the end of the year. Unsold goods at the end of the year 50,000 rupees. Adjustment number 2. Adjustment number 2. Unsold goods means nothing but closing stock. Adjustment number 2. During the year, goods costing. During the year, goods costing 20,000 rupees. 20,000 rupees was used by the owner for personal purpose. But not recorded. So the owner has taken away some goods he has used for his personal purpose, but there was no entry passed in the books of accounts of the business. Okay. Next adjustment. Adjustment number 3. Goods distributed as free samples. Goods distributed as free samples costing 20,000 rupees. Sale price would have been 25,000 rupees. Sale price would have been 25,000 rupees. You have distributed some goods as free samples to our customers. If you would have sold them, you would have got 25. But you have distributed them. You have not sold them. You have given it for free to your customers. Okay. Next.
Given for confusion.
Adjustment number 4. Goods used in the construction of building. Goods used in construction of building. Cost price of the goods 5,000 rupees. Cost price of the goods 5,000 rupees. Next. Goods stolen during the year. Goods stolen during the year 10,000 rupees not recorded. 10,000 rupees not recorded. So during the year some goods were lost by theft. We did not record an entry for that transaction. Next. During the year, goods donated. During the year, goods donated costing 30,000 rupees not recorded. So you have a trial balance and you have some adjustments. So you have to learn how are we going to show them in the final accounts. Is it clear everyone? So let us start. Now we have to prepare 3 accounts: trading account, profit and loss account and balance sheet. Trading account, profit and loss account and balance sheet. A small profit and loss account. And a small balance sheet. us start. Read the trial balance. What's the first information? Opening stock. How much?
1 lakh.
1 lakh. Where do you show opening stock? Trading account, debit side. To opening stock. 1 lakh. Trading account, debit side. Inner column, 1 lakh. Sorry, opening stock is written in the outer column. Next, purchases. Where do you show purchases? Trading account, debit side. But please write it in the inner column. 2 purchases. How much?
10 lakhs.
10 lakhs. 2 purchases. Trading account, debit side, inner column, because there are many adjustments for purchases. Next,
Purchase returns.
purchase returns. How much purchase returns?
20,000.
Where do you show purchase returns? You subtract it from the trading account out of purchases. Less purchase returns. How much? 20,000. Don't write the net amount now itself in the outer column because there are some more adjustments for purchases. So we cannot write the net amount in the outer column. Next, sales. Where do you show sales? Trading account, credit side. By sales. We'll show it in the inner column because there is some sales returns. Less. What do we have next item in the trial balance? Sales returns. Where do you show sales returns? You subtract it from sales. Less sales returns. How much? 50,000. Outer column you show 19 lakh, 50,000. Sales, I think there is no other adjustment. Hence we can write the amount in the outer column. Next, wages. How do you deal with wages? Where do you show wages? Trading account, debit side. Leave some space below purchase because we have many more adjustments. After leaving some space, you will write 2 wages. How much? 25,000. Wages. Trading account, debit side, outer column, 25,000. Okay. Next. So trial balance is over. All the information given in the trial balance has been consumed. Now read the adjustments. Unsold stock at the end of the year. How much? 50,000 rupees. Unsold stock at the end of the year. 50,000. How do you deal with unsold stock at the end of the year? Closing stock. So closing stock is credited to trading account and then shown as an asset in the balance sheet. So right here by closing stock. How much?
50,000.
Closing stock 50,000 rupees. Next. During the year, goods withdrawn by the owner for personal use. How much? Costing 20,000. Are you given the sale price of those goods? No. So during the year, the owner has withdrawn some goods for his personal purpose, but accountant did not pass an entry. Now we have to record. What is entry we have to record? So I'll go to my journal proper and I'll pass this entry. Drawings account debtor to purchases. How much? 20,000. Drawings account debtor to purchases is the entry you pass. Now how do you give the impact of this entry in your final account?
Minus.
Because of this entry, now drawings account will be debited. Drawings account will be debited. It will show a debit balance. What is drawings? It is opposite of capital. What is capital? When the owner brings money, we credit his capital account. When the owner withdraws money, we debit drawings account. Okay. So where do you show drawings in the balance sheet? You show it as subtraction from capital. In this problem, we don't have the capital balance. Hence I will write capital, inner column question mark. I don't know the balance, but drawings will be subtracted from capital. drawings 20,000. The first effect, because of this entry, drawings account will be debited. It will show debit balance. Where do you show drawings account? It's a personal account, receivable for the business. The business has to receive money, but the owner is not going to pay money. Hence what we do is we subtract drawings from his capital balance. Okay. Whatever he has given will be credited to capital account. Whatever he has taken will be debited to his drawings account, and drawings account balance will be reduced from his capital balance. First effect. What is the second effect? This entry is asking you to do what? Credit purchase account. This entry is asking you to credit purchase account. Now you have to credit purchase account. Please tell me, before giving effect to this entry, purchase account is showing what balance?
Debit balance.
Before giving effect to this entry, purchase account is showing a debit balance. Because of this entry, purchase account will be credited. If you credit, what will happen? Balance will reduce. That is why go to trading account and say less. Drawings. We have shown the double effect. Again I am explaining. Drawings account will be debited. It will show debit balance. Personal account, receivable for the business, asset for the business. But we don't show drawings as an asset. We are going to subtract drawings from the capital contributed by the owner. Is it clear? If you pull any item on the asset side to the liability side, it should be shown in minus. Actually, drawing should be shown as an asset for the business, because business has to recover money. But owner will normally not pay money. Hence, we subtract the drawings from his capital balance. Is it clear? Second effect. This entry says purchase account has to be credited. What does that mean? It means purchase account has to be reduced. Hence we are going to trading account and subtracting it from purchases. Is it clear? What can be debited to trading account? Please tell me. Only cost price of goods sold can be debited. Cost price of goods withdrawn by owner for personal purpose. Cost price of goods unsold. Cost price of goods used for construction. Cost price of goods stolen. All those costs cannot be debited to trading account. Hence we are removing it from the debit side by subtracting it from purchases. Is it clear? Next. See the next adjustment. Goods distributed as free samples. How much? Costing 20,000. Sale price? Sale price would have been 25,000. We have actually not sold. We have approached customers and we are telling the customers, sir, we are introducing a new product. So you please use it, and if you like, next time onwards you can buy it. So we have distributed free samples to the customers. Cost price is 20,000. If you would have sold it, you would have got 25,000. Okay. Now are you selling the goods? No. So the sale price becomes irrelevant. So goods are being distributed for an expenditure for the business called as advertisement. So for an expenditure called as advertisement, goods are flowing out of the business. What is the entry we pass for that? If you write advertisement account debtor to sales, that means by distributing samples you want to recognize profits. Are you able to understand?
Yes, sir.
Just by distributing samples, if you want to write advertisement account debtor to sales 25,000, that means even by distributing samples you want to make profits. Actually, are you earning any profits?
No.
Hence, we cannot recognize any profit. We have to recognize the transaction at cost. So, how do we deal with it? This entry is now passed. It was not passed earlier. So, because of this entry, advertisement account will be debited. It will show a debit balance. Can I carry advertisement to the next year?
No.
Can I carry advertisement account balance next year? It is an expense. Nominal account. Indirect expense. It should be debited to the profit and loss account. So advertisement will be debited to P&L account to close it. First effect, advertisement is debited to P&L account. Second effect, this entry is asking you to do what? Credit purchases. Crediting purchase means increasing the balance or decreasing the balance? Crediting purchase means decreasing the balance. Hence we will go to trading account and say less. Goods distributed as free samples. Sorry, don't draw any line. Just write goods distributed as free samples 20,000. Did you understand both the impact?
Yes, sir.
First effect, Advertisement account should be debited. Advertisement account will show a debit balance. Advertisement is a expense, hence debited to P&L account. Second, purchase account has to be credited. Crediting purchase account means decreasing the balance. Hence we are coming to trading account and subtracting it from purchases. Is it clear, everyone? Next.
Goods used in the construction of building cost 5,000.
Goods used in construction of building costing 5,000 rupees. What is entry we pass when goods are used for construction of building? Building account data to purchase account. Write down the entry. Buildings account data to purchases. How much?
5,000.
Building account data to purchases is the entry you pass. Now again this entry will have two effects. Because of this entry, building account will be debited. Building account balance will increase. Building should be shown as an asset in the balance sheet. Then write building 5,000. Or suppose we have already spent 95,000 on building. Suppose this number is just an assumption. Add goods used 5,000. Outer column will show 1 lakh. I'm just assuming that we already have a building worth 95,000. We have used 5,000 worth of goods in construction. So this 5,000 will be added to the cost price of the building to show the total cost 1 lakh. Is it clear, everyone?
Yes,
sir.
So first effect is over. Did you understand?
Yes, sir.
Manoj. Building account is showing a debit balance. We are assuming that it is showing 95,000. This entry is asking us to again debit the account. That means to increase the balance. Hence we are going to the balance sheet and adding the goods used. Okay. Second effect, purchase account should be credited. But crediting purchase account means what? Increasing the balance or reducing the balance? Reducing the balance. So here we will write less. Goods used for construction. 5,000. Next, one more adjustment. During the year, goods stolen costing 10,000 not recorded. What is the entry you pass? Goods lost by theft account data to purchase account. Goods lost by theft account data to purchase account. How much? Goods lost by theft account data to purchases 10,000 rupees. So how do you deal with it? Goods lost by theft account. Because of this entry, goods lost by theft account will be debited. It will show a debit balance. But it is not an asset to be carried forward to the next year. Hence that account should be closed by debiting it to profit and loss account. So right here 2 goods
Stolen.
lost by theft. How much? 10,000. The first effect. Goods lost by theft account should be debited. It will show a debit balance, but it is not an asset to carry it forward to the next year. Hence it is debited to the profit and loss account and closed. Next, 2 purchases. Purchase account has to be credited. Credited means increase in balance or decrease in balance. So I have to reduce the balance. So right here less goods stolen 10,000. Not only what is the net amount of purchase we can write in the outer column.
Sir, one more entry, sir.
One more entry is there.
Yes, sir.
Yes, sir.
Okay. One one more adjustment. What is your adjustment? During the year, goods donated costing 30,000 rupees. What is the entry passed for donations? Donations account debtor to purchases account. Donations account debtor to purchases account. How much? 30,000. Donations account debtor to purchases 30,000. Donations account debtor to purchase 30,000. Now again observe, this entry has two effects. One, donation account has to be debited. Second, purchase account has to be credited. Because of this entry, donation account will be debited. It will show a debit balance. Can you carry it forward as an asset? No. In the balance sheet? No. Donation account has to be closed by debiting it to profit and loss account. Two donations. How much? 30,000. First effect. What is the second effect? Purchase account has to be credited. Crediting purchase account means reducing the balance. Hence come to trading account and you write here less donations. Donations 30,000. Now net amount can be written in the outer column. How much? 8,95,000. Donation account is debited to P&L account. Purchase account is credited. That means purchase account balance is reduced. Is it clear? Now we can calculate gross profit. To gross profit. How much? Total of the credit side 20 lakhs. 20 lakhs. What is your doubt? Ask me now. Gross profit, how much do you get now? 20 lakhs minus 1 lakh, 8 lakh, 95,000, 25,000. 9 lakh, 80,000. If you want, you can write it here. By gross profit brought down 9 lakh, 80,000. Brought down. And stop the problem here because we are not given complete information. We are only dealing with extracts. This is how we are going to deal with the problem. Is it clear? I'll give you one problem for homework. Write it down. Practice at home. Write down. Again, write down one problem. Extract of a trial balance. Extract of a trial balance. Particulars: debit, credit. Extract of a trial balance. Particulars: debit, credit. Write down. Opening stock. Debit balance 2 lakhs. Opening stock. Debit balance 2 lakhs. Next. Purchases. Purchases. Debit balance 6 lakhs. Purchase returns. Purchase returns. Purchase returns. Credit balance 30,000. Carriage inward. Where do you show carriage inward? Trading account debit side. Carriage inward 25,000 debit balance. It's an expense. Hence debited to the trading account. Carriage inward debit balance 25,000. Next. Next. Sales. Credit balance 8 lakhs. Sales. Credit balance 8 lakhs. Sales returns. Debit balance 40,000. Capital. 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 Credit balance 2 lakhs. asset, debit balance 1 lakh. This is the extract, not the complete trial balance, but a portion of the trial balance is given to you. Close the trial balance. Adjustment number 1. Adjustment number 1. Closing stock is of the value 60,000 rupees. Closing stock is of the value 60,000 rupees. Adjustment number 2. Adjustment number 2. Goods distributed as free samples costing 12,000 rupees. Costing 12,000 rupees, not recorded. Next, goods costing 10,000, having a sale price of 12,000, were used by the owner for personal purpose. But not recorded. Next, goods lost by theft during the year, 5,000 rupees. Goods lost by theft during the year, 5,000 rupees. Next, during the year goods donated, 20,000, not recorded. During the year goods donated costing 20,000, not recorded. Okay. Next, during the year goods used in construction of an asset. During the year goods used in construction of an asset costing 5,000, not recorded. During the year goods costing 5,000 used in construction of an asset, not recorded. So please do it as homework. Okay. So tomorrow onwards there will be a change in schedule.